And welcome back to Bitcoin Advisors channel. It's another beautiful day out here in Westlake Village, California, and I'm bringing you this cryptocurrency video amidst the CPI inflation data release. Came in hotter than expected at 9.1%. It is the highest inflation we've seen yet in 41 years. So what does that mean for markets? And first things first, before I get into some live trading here, I want to talk about what I see in the charts here. And really, it looks like I'm about to get smoked after having a very nice trade. Oh, we got 15 minutes left on this candle. On the hourly, no. No. What do you know? The bull moons are out. And I could very easily get stopped out. As Stokes cross up, volatility is increasing. We're getting out of the bearish control zone. And where would I be targeting a move? Any kind of just an hourly closure above there? Is that going to get us back up to... I might have to pull that stop out. No, I don't want to pull that stop out. But the rules are the rules, and that's why, once again, humbled by the markets again, without having a stop loss and a take profit, an entry and exit, and an entry and exit and a risk management. You're just gambling, right? And apparently, I'm a gambler, and I've been shorting off this green 55 here the past couple of hours and did not put in a take profit. So after being up 100 grand, could be down 100 grand if I get stopped out on this trade, as I do have a stop in at 2,200. Thinking about raising it. If we do get an hourly closure back above here, I could raise the stop up above this purple 200. Why would I do that? Well, we saw the potential for 1, 2, that would be the third drive of bearish divergence. And it could be right here, in fact, if we can't get above that green 55 on the next 15-minute closure. I think my bear pants are on still. I'm still extremely bearish on this market. Stokes have now had a bearish reset and could topple over right now, right before our very eyes, and put in another drive yet again of bearish divergence, right? So what is that? This market can fake you out and shake you out, and my camera is not as good as it has been in the past, but what's going on here is that is 1, 2, that would be the third drive of bearish divergence. Should get you a shot back to the bottom side of the range, coming in at the 382. And just for all intensive purposes, I'm going to put a take profit in right there. I'm going to put my stop loss right there. So I'm going to show you how to do that. Take profit, stop loss. My entry was right there. On this little baby account, I'm going to document this account from $100,000 to $1 million. I'm going to take this account, not by buying some XYZ crypto coin and, buy 10 different coins and just hope for the moon. No. Don't believe any of those shamsters out there. You need to learn how to become a trader to be successful. You never get married to an asset. We don't care if it goes up or down in this market. We care about making money. And so that's what I'm going to show you guys how to do. So first things first, where do you do it? You got to click this little box right here. KuCoin is not very friendly, as it won't let you move this box around. KuCoin, why? Because they want you to screw up your trade. So you got to remember with 193 is going to be my, actually, I want to put it a little higher. Nope. Should I stick with my guns in the 20? That's above the range wick highs right here, coming in at 2191, 2200. I have it set on my other account, which is right about there, 2250. I do believe the price wants to come down here, and is we're just experiencing the initial volatility. Everybody went 100x down, and everybody went 100x levered down to the downside off of this candle. Boy, had I known, had I put the take profit in, I probably wouldn't have put it in there, right there. I probably would have put it in a little bit deeper, because I do think at some point we are going to retrace down to about 18.2 and then 17.6 or 17.7. But what I want to do is just show you, for all intensive purposes, on a small trade, 500,000 short. Now it's a little bit bigger. 650 short. Take profit and stop loss. So stop loss at above the range wick highs, just right there. If we get a wick above there, it's not going to look pretty, and we're going to get wicked out. So I'm going to put it at 20,180 right now, and 19,346. 20,180. How good is my memory? 19,326. That's our take profit. There's our stop loss. I like to use the last price. That's fine with me, and I'll hit confirm. 19,346. Oh, 19,326 is what I put. So I'm going to readjust that. 19,346 is the magical number. 19,346. Okay, confirmed. So this is just for a short-term trade, a little easy baby trade. And how will I be getting into this trade? Really, it's just not the ideal setup. However, we do have several drives of bearish divergence. What is that? When price is making lower highs and RSI is making higher highs. How would we confirm this as a lower high? I would need to see a 15-minute closure back below here, and that should get us the move back to the bottom side of the range at a minimum. This 236 right there, and it could come all the way down. In fact, downside moves are going to be quite lethal, I believe. So even if this thing does want to pop back up and make some kind of a higher high, I think ultimately we're coming down, down, down. And what is NASDAQ doing? What is the dollar doing? That's the big question. So NASDAQ on the daily time frame doesn't even know what to do. It's putting in lower highs. And we've been talking about this all week long, saying, hey, look, this will be a fake out of the breakout. And if we do close back below, anywhere below 11,725, Stokes are crossing down. Volatility is about to tick up. And we do have several drives of bearish divergence. Again, what is that? Price is making lower highs. RSI is making higher highs. In a downtrend, that is hidden bearish divergence. Again, price is making lower highs, RSI is making higher highs. And this is the 3-drive variety, and this is a confirmed lower high. So I would expect for the move to get us to the bottom side of the range as momentum is crossing to the downside. And those inflation numbers just came out worse than expected. I mean, holy smokes, 9.1% inflation. What is going on here? I don't think we're going to make it. That means 15 and year over year inflation at 15%. Most people haven't even realized what's happened yet. Most people don't even know. I talked to my friend at the gym today. I said, did you hear what the inflation number came in at? He said, no. What are you talking about? He doesn't even know what the inflation numbers are, right? Because he's too busy working his poshy job as a psychologist somewhere, right? He's just getting all these COVID people that are just totally lost their marbles over the last year. Their marriages got ruined. Their kids are going crazy. They don't know what to do. And he's getting paid like double what he's normally getting paid. It's pretty bad how much the pain and suffering is out there. So what I want to do is hone this back in and take a look at some of the higher term time frames. 2-day crossing down. The 2-day will be closing today, 11,791. So if we'll cross back up, if we stay at this level, If we bounce any more here on the NASDAQ, a cross down will be lethal to the downside. Volatility ticks up. I'd look for a similar reaction to what we saw there. And this was and I wouldn't be surprised if that was the last Fed meeting right there on June 2nd. That was June 2nd. No, that wasn't June 2nd. June 8th. I believe that was probably the last Fed meeting. Needless to say, things are going to get more expensive for the foreseeable future. S&P's looking droopy, holding the trend line to the downside. Dixie coming in hot. And we do have a target up here at about 109 based off of this breakdown, which is maybe it was off of this breakdown right here. Nope. Where's that target coming in on? Oh, I'm looking at the daily time frame. Come on. The daily. Yeah, there we go. From this high to this low, we're looking at something like that. So can the dollar hold on for dear life and continue onwards and upwards? We are crossing down, and we've got several drive a bearish divergence again, where price is making higher highs, RSI is making oh no, it's not bearish divergence. Higher highs. Okay. Who's texting me right now? What do you want? What do you want? What do you want, sir? So the dollar looks bullish still. May come back down and test 107. Volatility has maxed out for, it looks like, the third time here. And that can't be too good. The dollar skyrocketing. I don't get how the dollar skyrocketing personally, and inflation's coming in higher than expected. Doesn't make any sense at whatsoever. How's the 5-day looking? Bullish. Where's those Bollinger Bands? As long as we're closing above the topside Bollinger Band on the 5-day, volatility is ticking back up. I am looking for these targets to get hit. First stop here at 109, second stop at 112, and ultimately, we're heading up to 120 for the dollar. So bullish dollar, bad for Bitcoin, bad for stocks. We are only half day and half. It's hump day. Wednesday's the hump day. We're halfway into this week. So what does the daily time frame say? Look at that reaction on the daily. We got a perfect test to the bottom side of the range, almost to the bottom. And could we put in another higher low? To me, it looks like a fake out. This is just a fake out, in my opinion. I could be wrong, but this has been the play. I mean, we've been ranging between 18.8 and call it 21.7 for the last month. And are we going to continue to range? What is CME saying? CMEs will cross down and remain crossed down as long as we're closing below 20,112. 20,112. That's the line in the sand. On the 4-hour, what are we doing? We're crossed up. Volatility is low. So again, this is a corrective bounce. And as you can see, price went down, and now volatility is decreasing, and we're trading sideways. So bearish reset incoming. 12. Look at the 12 minutes and 30 seconds. We're going to close this candle. And do we have any hidden bullish divergence? That is a slightly lower low. I don't know. Close enough is close enough. So maybe that is another drive of bullish divergence. 1, 2, 3. Gets you a shot to the green 25. I wouldn't be surprised off of this next tick to get a move and maybe fill the gap here at 20,360, which would probably stop me out of my trade. Not what I want to see. The 2 hour, you know, that's kind of a V-shaped recovery on the 2 hour. We're going to cross back down. Yep, so that's it for today, guys. Overall, look at this big bearish candle. I would expect some continuation, some follow through off of that, especially if the dollar continues to rally. And at a minimum, what are my targets here? What are my targets? I mean, very similarly to the 4 hour candle at the top of this range, we kind of had this wick action. I would say oops. How could we use our fibs to our advantage here? So we already hit that target. That's the thing, is there's not any really super good targets right now. Yeah, this is the next stop. That'll probably be my take profit on this massive trade. And then it'll probably shoot down. Second stop right here. So real easy. I mean, stop loss 2,200. Stop loss at 2,200, and looking for a move all the way down to, you know, you could do take profit 1, take profit 2, take profit 3 right there. This isn't financial advice. I'm not a financial advisor. Definitely recommend you have a trading plan before you do anything. And I'll be catching you up with another cryptocurrency video tomorrow. Hope you guys have a blessed and highly favored day. Signing out. Take care.